think the people are too bearish right now. All right, I do weekly polls on Bitcoin. You guys know this. I do weekly polls. This week I asked the question, do you think the bottom is in for Bitcoin? Just like every week, we got 31% of people think the bottom is in. 31%. Meaning 69% of people think the bottom is not in. I simply don't see that reflected in the charts. In the charts, I actually see rounding out structures. I actually see the DXY rejecting. I see the S&P 500 finding support, right? I'm a bit confused as to why so many people think we're going lower. Now look, just to clarify, my prediction is not based on a price point. I personally don't really know where we're going to bottom. But I can tell you right now, the fact that 70% of people think we're not actually bottomed out yet at 17.5k, while we are in Q4, while the DXY is rejecting, while the S&P 500 is bottoming out or slowly bottoming out on the turn-week SMA, I think it's a bit skewed. I think people are overly bearish. I'm not saying you should change your mind, but I'm going to encourage you in this video to actually take a look at what the bullish arguments are. I think people are getting very caught up in the fact that we're seeing a recession. I think they're very caught up in the fact that we're seeing global events such as the electricity crisis in the energy crisis in Europe, Russia, China versus Taiwan. I think they're getting caught up in all of this stuff. I don't think they're actually looking at the charts. And as you guys know, the charts are the most important thing in a financial market. We have to trust the charts. We can't trust geopolitical situations. They are not trustworthy. They change every day. They're unreliable. And guess what? None of us are military strategical experts. Simple fact. Okay? So what are the charts saying? Let's flick over. Let's see. 4-year cycle theory. Bitcoin is in a 4-year cycle date range trend. This is the strongest trend Bitcoin has ever had, and most likely the strongest trend Bitcoin ever will have. It is a 4-year cycle, started off at the halving. It's based on fundamentals. It's not a random line. It's not a trend line. It's not a moving average. This is based on fundamentals, based on the halving. Started in 2012, through to 2016, through to 2020, and going to be going again in 2024. The trend kicks off at the halving. It triggers with a bull market. Then we enter 3 years of bear market, 1 year of bull market, 3 years of bear market, 1 year of bull market. 3 + 1 = 4, hence 4-year cycle. Halving every 4 years, 4-year cycle, okay? Strong date range trend. It's based on many factors, many variables, and the date range trend, extrapolating across, predicts that we bottom out in Q4 this year, okay? So basically between now and the end of December, Q4, quarter 4, that's what it is. 3-month period at the end of the year, that is what Q4 is. That's where the date range trend, the 4-year cycle, the strongest trend Bitcoin has ever had in its price history, and probably the strongest trend it ever will have, that's where it predicts we bottom. Therefore, any time between now and the end of December, as per this trend, right? And the trend is your friend until it ends. We are predicting Bitcoin to bottom out. That means we're in the bottom region, okay? We are inherently on Bitcoin. If you agree with this trend, which you should because it's objectively true, I'm telling you the facts, all right? This is what the trend is. If you agree with this trend, we are in the bottom region on Bitcoin. Okay, so we can bottom out realistically any time now, and it would be entirely valid by the 4-year cycle date range trend. So what is the evidence for us to bottom? Does that mean we have to bottom now? No. We can go lower. But the point is, this is prime time now. We're here. Okay, so getting overly bearish now, when realistically we can bottom out any day as per the date range trend, is ridiculous, I think. So what's going on in the charts? Okay, because I know that's not enough evidence. What's going on in the charts? Well, in the charts, we have, it's very complicated, of course, but we have a major downtrending line stemming from November. We're getting pressed against that line. We'll likely be making a move on that line, either a rejection or a drop down very shortly. We also have a bullish divergence on Bitcoin. If we bring up the volume on the Binance chart, we can see the volume is decreasing the downwards trend, representing a bounce. We have a descending wedge formation as per the dashed yellow lines here, which is, of course, pretty bullish. If we're flipping over to another chart, we can see, and this is the short-term analysis, if we lose, and this is for people who are interested in trading, of course, if we do lose 18.3k/18.4k, we will be retesting the lows at 17.6k. That's a given fact. If we do break above 19.4k decisively, I know it's pretty rough, but if we do break above that decisively, in fact, we could bring it up here to 19.5k. We will most likely be seeing a retest of that yellow downtrending line stemming from November. That's for short-term analysis. Doesn't really tell us much about the long-term price action. But if we flip over to something like, you know, what we have in the buying plan here, and this is further expanding upon the point that we had before in terms of the Q4 bottom, we can actually see that this downtrending line compresses against many fundamental support zones that we might see as potential bottoms on Bitcoin, meaning that if Bitcoin is to bottom out, hypothetically, at 17.5k, we will be doing so before the 19th of October, which is in the next 16 days. if Bitcoin is to bottom out at 13.8k, we will be doing so before the 15th of November, which is, of course, within a month or about a month and a half. If we were to bottom out on Bitcoin between, above 11.5k, we would be doing so before the start of December on November 30th, which of course is about a month and a half away to / almost 2 months away. Okay, so look, the point is, regardless of how low you think Bitcoin's going to go, okay, because some people think it's going to 11k, even if Bitcoin went downwards further, and we can extend this all the way down, even if Bitcoin was to go down towards, let's say, a 9.6k Bitcoin, which is where the CME gap is, which is possible, we would still bottom out before the 9th of December. Okay, so even in these very low price point targets, we still will bottom out in Q4. So some people would say, okay, well, that's not really a reason to get bullish. And I want to clarify, I'm not bullish. I'm just critical of people who are overly bearish right now. There's really no reason for it, right? We expanded on that. What we can do as well is look at the S&P 500. S&P 500, yeah, it lost the low. It's put in a lower low right now, but it's holding the 200-week SMA. And if we zoom back on S&P 500's price action, we can see that the 200-week SMA is not only a major support zone, but also during COVID, it's a major resistance zone, which adds to the validity of the line, right? Also during here, 2018, support, back here in 2016, that's support as well. This thing has been a major support line throughout basically the entire lifespan and resistance line of the S&P 500. We very rarely lose this line. Now, yes, we could lose it. I'm not saying we can't lose it, but even if we do lose it, it's important to remember the S&P 500 and Bitcoin don't act together. And this is partially debunking the argument people use. The macro is bad, therefore Bitcoin needs to go down. That's the argument, right? Well, guess what? If the macro is so bad, it's the S&P 500, it's the traditional markets that are mainly affected by the macro. And that's a confirmed fact. Bitcoin has a 0.7% correlation coefficient to the S&P 500. It's the S&P 500 and the NASDAQ and whatever it may be, Dow Jones, that are mainly affected by macro. Bitcoin only goes down because of personal financial situations that are affected by the macro, right? These things are directly affected. Bitcoin is indirectly affected. That's very important to note. And we know that. We know that for many reasons. One of the reasons, it's very easy to debunk these claims. One of the reasons is this. Bitcoin topped out in November. The S&P 500 and the rest of the markets topped out in January. By the time the rest of the markets topped out, Bitcoin was already down 40%. So if Bitcoin can top out before the traditional markets, and if Bitcoin can go down 40% before traditional markets even start going down, who's to say that Bitcoin can't bottom out before traditional markets, and who's to say Bitcoin can't be up 40% before the traditional markets bottom? So looking at the S&P 500 and looking at the macro in a conventional sense and applying it to Bitcoin is not necessarily a valid argument. It doesn't necessarily work. It is, I guess it is valid because they are correlated, but it's not like a fact, right? It's just a speculation. There's no telling, and based on historical data, which obviously November top proves, there's no telling as to when Bitcoin will bottom out in relation to traditional markets. So acting like that's a main piece of data that's holding you back from saying the bottom's in is ridiculous. Now, I'm not saying the bottom is in. It's not what I'm saying. I'm saying we need to retest the bottom at least. I'm saying we need to go back to that region at least like 18k, and probably touch the bottom at least, maybe even drop below it a little bit, see a wick below it. That's what I'm saying, because I think the Q4 bottom, that's what my prediction is, Q4 bottom, and we haven't actually seen a bottom yet, right? The bottom was in June at this point. So we do need to come back down and touch it again, in my opinion. But I'm just saying, for all the people who say sub 10k Bitcoin, all this stuff, I just don't see a massive amount of evidence for it. And we can get into another piece of data, and this is something that's very interesting as well. This is the CBBI. This is the Colin Talks Crypto Bitcoin Bull Run Index. And what it does is it essentially takes many metrics. You can see the metrics here: price cycle top, many things, power multiple, 2-year moving average. There's a lot of things here: reserve risk, Wool Bull, top cap versus CVDD. These are things that you would have remembered from the bull market. People use quite a lot, all of which are relatively unaffected by themselves to a certain extent. But when combined, as you can see, this thing kind of predicts where the tops are and where the bottoms are in Bitcoin. It did it quite well. Okay, so what we have is when the CBBI confidence, as you can see this number at the top here, I can't really point it out, but you'll see it there. CBBI confidence goes up to near 100. The closer it gets to 100, the more likely it is that the top is in for the bull run. It predicted the top very well. Obviously it wasn't around, but the data used predicted the top very well in 2013 and also, of course, in 2017. Now, it was much less accurate in 2021, but I think 2021 was, of course, a bit of an abstract structure due to many reasons. One of the reasons being the bull market was kind of overvaluated towards the beginning because Tesla and stuff and MicroStrategy, they all got into Bitcoin. It drove a massive amount of hype into the market way too early, and that's why we saw the double top formation. So it didn't work there. But also in bear market bottoms, it works pretty well. As we get closer to zero, right, on the CBBI confidence, it's more likely that the bottom is in. Predicted the 2015 bottom quite well. 2018 bottom predicted quite well as well. We got to 3, and right now we are down here. We were at 4 recently on the CBBI confidence. So again, this is a chart that's taking into consideration 9 separate, very prominent, metrics here, indicators, whatever they are, that generally try and predict the tops and bottoms on Bitcoin. And all of those metrics combined are pretty much saying we're not quite at the bottom, but we're very, very close to being there. Okay, so that's interesting as well. And if we go to Pi Cycle by itself, by the way, Pi Cycle top and bottom indicator, the Pi Cycle top and bottom indicator said the bottom was in June. Okay, and we've seen this before. Now, it doesn't actually mean the price of June was actually the bottom. We saw in 2015, for example, we saw a bottom here. Pi Cycle said the bottom was in, and then we rounded out. We saw a wick, and we retouched that bottom as per the 4-year cycle theory. Same thing in 2018. We saw that the bottom, Pi Cycle low indicator. We saw a rounding out. We retouched it during COVID. And now we're probably seeing the same thing, where we saw the Pi Cycle bottom trigger, and we're rounding out. We might retouch that bottom. Okay, so all of the conventional metrics for Bitcoin, really, I mean, they're all kind of predicting Q4, 4-year cycle, Pi Cycle, all of these metrics here, they're all kind of projecting a Q4 bottom on Bitcoin. And they're all kind of saying, hey, look, even if June wasn't the bottom, they're saying, hey, look, June probably wasn't the bottom, but we're going to round out, we're going to retest that, and that very well might be the bottom. That's what they're saying. So by all conventional methods, and I know the argument that's going to counter this. I already know what you're going to say, okay? And I agree with the argument. It's, okay, well, conventional methods, they don't really work anymore because this isn't a conventional bear market. Well, is it not? Is it not a conventional bear market? Okay? I don't like that argument. Let me check. Okay, I agree with the premise of it. Yes, it's not conventional in the fact that we have a recession, but generally speaking, this is a conventional bear market. What's so unconventional about this? We've gone down on the exact week that the Q4 bottom that the 4-year cycle expected, and we've done nothing out of the ordinary in this entire bear market other than go down as per what usually happens. We've seen a horizontal consolidation level, right? We've seen this happen. This is previous. We've seen this happen before. Horizontal consolidation level at around 30k, okay, 28.6k to be precise. We saw that in 2018 as well. We saw that in 2015. What is so abstract about this bear market that you're saying that, oh, it's unconventional, we can't rely on old methods? It's like, no, this is completely conventional. There's nothing unconventional about the price action here on Bitcoin. The only unconventional thing is what's happening in the macro. And guess what? We don't really have any evidence to suggest that macro has really affected Bitcoin too much because we're not doing anything unconventional at this point. If we bottom out at Q4, this is a completely conventional bear market. If I was here last year, all right, it's 18 months ago, before I knew anything about the recession, and I looked at this chart right now and I saw where we were up to, I wouldn't even have any thoughts about there being an unconventional bear market. It looks like what it's meant to look like. So the argument that, we can't rely on old indicators because this is an unconventional bear market, it's like, well, no, you're wrong. Nothing yet has happened that is unconventional in this bear market. That's just a simple fact. There's nothing here that's happened. What needs to happen for it to be unconventional? I'll tell you right now. We need to go past deep into January 2023, and we won't be bottomed. If we go into January 2023 and we're not bottomed out yet, that's unconventional. If we drop sub 10k, which is below the 80% correction we've seen on 2 separate occasions, that's unconventional. Right now, nothing about this is unconventional. Okay, this is a very, very, very conventional bear market. And so we can rely on old methods still, because old methods have not been invalidated yet. They haven't been proven not to work. So the fact that all of these old methods, these 9 separate conventional indicators that generally are pretty accurate as per this chart here, are calling that, hey, the bottom was in July, and we're going to round out, we're going to retest it, we're going to mark the bottom here in Q4. The fact that all of those indicators are basically saying that, is that not enough evidence to at least slightly consider the argument that maybe the bottom is in? Or not in, right? Not in, but we will retest it and maybe go a little bit below. That's kind of the argument that I'm looking at here. Now, look at Bitcoin on the 3-day chart as well. It's like, well, it doesn't end there. It's like there's compression on the 3-day chart, okay? We're getting compressed between this yellow downtrending line on the 3-day chart on the RSI and 34 on the RSI. Every time we lose 34 on the RSI, we see a conventional drop. Every time we bounce off of it, we see a conventional bounce. And we're getting compressed between that. And that compression will be ending towards the end of December, meaning we will have to make a move before the end of December. So, you know, a lot of stuff here in these charts, it might be a coincidence, but it's all kind of lining up pretty well. Another thing we can look at as well is you know, interest rates in America. Let's look at this. Is the expectation on the left for a 50 basis point hike in the next hike on the November the 2nd. And this is the expectation for a 75 basis point hike on the right. This expectation for a 50 basis point hike in the United States of America has gone up from 23% to 49% in the matter of like 2 weeks, okay? Which means the macro, as per the expectations by the market, is looking like there's a light at the end of the tunnel, okay? I know it sounds ridiculous. How is a 50 basis point hike bullish? Well, I'll tell you why it's bullish. It's bullish because it's lower than what is expected before. We were expecting a 75 basis point hike. Now it's drifted up. The percentage for a 50 basis point hike has drifted upwards, meaning that people are seeing a harsher response by the Federal Reserve as less necessary. Does that not indicate a light at the end of the tunnel? It does to me, right? The fact that that's going up is a good sign. This is stuff you generally see before the end of, you know, the end of a bad situation. We're starting to see that stuff kind of happen. Now, if you're looking at, you know, Taiwan, China, and Russia, it's like, well, you know, as I said before, yeah, I mean, there's no doubt that that stuff's bearish. It's not bullish, but you can't rely on that sort of thing. You know, how many times have people been waiting for a major event to happen? People have been waiting for North Korea to nuke the US for like years. It's like, yeah, it might happen. It very well might happen. I know that's a very extreme example, by the way, but it very well might happen. But the point is, you can't rely on that. All we have as analysts is historical data. We have to go off the historical data. The historical data is quite clear. The historical data presents to us that, hey, we're in Q4. We're probably going to see a Q4 bottom. This is a time in which you should really start considering all possibilities here, right? This is time for you not to get overly bearish. This is not a time for you to start calling for 10K. This is a time for you to think, okay, is the bottom in here? If it's not, where is it, right? And you need to really consider, you know, that it's probably not going to be much lower than where we are. I've said on multiple occasions here. I've said on multiple occasions, and people are going to take this video, they're going to watch this video and say, oh, Wolf thinks the bottom's in at 17.5K. It's like, no, I've said multiple times, I don't know where the bottom is. All I know is when. I know when the bottom is. I'm very confident about when it is. I know it's going to be within the next 3 months on Bitcoin. In Q4, it's going to be sometime, most likely within this month or next month, within the, you know, by the end of November, the bottom will be in. So I'm looking at that and I'm thinking, how much time do we have left? We don't have much time left. Where is Bitcoin? Bitcoin is consolidating, seeing a rounding bottom. What have we seen before? A rounding bottom. What are the previous indicators telling us? Price cycle top, etc. It's all telling us that we're probably going to bottom here. You know, therefore I'm saying, hey, look, you know, we're going to see a Q4 bottom most likely, as per the 4-year cycle. We have no reason to believe otherwise, because any other claim is invalid because it's going against the trend. And we're seeing what's conventionally seen as a rounding bottom formation in a bear market. So, hey, you know, maybe we shouldn't throw away the double bottom theory. Maybe we shouldn't just disregard it because of, you know, oh, the macro. Like, you know, I think we need to be a little bit understanding here that, you know, discounting a Q4 bottom and saying we're going to bottom out into 2023 specifically, forget about price targets, saying we're going to bottom out into 2023, you're literally throwing away a completely valid, a completely perfect 12 to 10-year date range trend based on 3 halvings of Bitcoin. You're just tossing it out and disregarding it for no reason because we haven't seen any unconventional deviations from the trend yet. So if we're following a trend perfectly that's been going on for 10 years, there's no indicator that it's really going to be ending. And we're seeing a conventional bear market by all means necessary. It's like, well, why would you throw that away? Thanks for watching the video, guys. I want to take a brief look into the BitGet Exchange. Now, this is my favorite exchange. I use this exchange for trading personally. I think everyone in Wolves Crypto should do so. Why is that? Well, the reasons are very clear in my opinion. First and foremost, it's 5 times cheaper than Binance, and Binance is known to be the cheapest exchange. It's also non-KYC on your personal end if you don't want it to be, and that obviously stands true to the values of cryptocurrency being decentralized. You can also KYC if you want to make it easier for tax reasons, but if you don't want to, you don't have to. That means that it is available globally, so everyone in the world can access this exchange due to the fact that it's non-KYC, which is great. It also has a protection fund, which is a very important thing, right? Because You know, exchanges get hacked all the time, and people get hacked all the time by people in their personal lives. If you do get hacked and something happens, you can make a claim to that protection fund. They've got over like $200 million in reserve, so that if you make a claim and your claim is accepted, you can get that refunded into your account. That adds extra security to the exchange as well. And then on top of that, it's got a reward center that's available with my referral link, and you can gain access to over 4,000 USD in rewards. And I think just a temporary time frame, there is an extra little bonus thing going on. If you sign up to the exchange, use my referral link, and you do one trade, you'll get $10 deposited into your account, regardless of whether that was a profitable or negative trade. So go ahead and sign up to the BitGet Exchange, use my referral link. It really helps out the channel, and it definitely helps out yourself. This is by no doubt, by no stretch of the imagination, the best exchange I have found in the cryptocurrency market. It's so good that I actually reached out to these guys for a partnership. They didn't reach out to me, so check it out. And then we've also got the Crypto Academy, and if you're interested in becoming a trader, if you're interested to learn how to trade, to learn how to do TA, to learn how to identify market patterns, etc., and navigate an exchange correctly, you can sign up to this course, Become a Trader, a 10-unit course. This course is, of course, developed by myself and Megawell Crypto, who's a fellow analyst in the space that a lot of you already know. We work very closely, and we worked closely using our two separate perspectives on the market to create one very consolidated, very concise course that is no doubt extremely useful for anyone wanting to become a trader or anyone wanting to improve their trading capabilities. We've got 10 units. All of these units have been critically analyzed by ourselves and also people we know in our personal lives, and we found them to be completely coherent and completely effective in teaching people how to trade. We use different learning strategies, for example, visual learning, verbal learning, practical learning. We've incorporated all of that in, and this is by no stretch of the imagination the best course you're going to find on the internet for cryptocurrency education. So go ahead and email us here at Crypto Academy Courses to find out more information. Without further ado, I'll end the video there. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.